Hello and welcome to TA for Traders. It's Friday the 19th of May and I'm Nigel Croft. In this video we'll be looking at the charts on 4 stocks. Starting in the US, we'll be looking at Shopify, which overnight has had a secondary offering just over 500 million, which priced very aggressively just below the market close. We'll then be looking at Gap, which came out with figures after hours and moved up 4% in after hours trading. We'll be looking at the charts on that. Then we'll be moving to the UK, looking at Wincanton, which came out with figures earlier in the week, and looking at Burberry, which has come out with figures this morning. Let's start with Shopify. So you can see that the announcement of the secondary took the shares lower yesterday, but they closed strongly at 92.11. The actual price on the secondary was at 91, so a very slight discount of only just 1.2% below that close. A very positive performance. You can see the shares have been in a bull run. It came back yesterday, found support at the 20-day, which was very positive, and RSI well above 50, MACD still short-term above the long-term. That chart looks good on a daily basis. Looking at the weekly, perhaps here it's slightly overextended away from the moving averages. Slightly overbought on the RSI as well, up at 87, and the short term is becoming a big gap between that and the long term on the MACD. So on the weekly, I would say that it needs some consolidation, perhaps a drift over a few weeks, maybe come back to the 90-85 level. On the 4-hour chart, you can see the consolidation brought us back to the 54-hour average, and we're now trading back above the 24-hour average, which is all good. However, there is a sell signal coming through from the MACD as the short terms cracks below the longer term, and so therefore on that you should expect some consolidation. So overall on Shopify, some consolidation should be expected, but the medium term picture does remain positive. On the support resistances, there's resistance at 95.88, nothing above there, and the support's coming in at the 50-day 74.87 and then 71.27. Moving on to Gap Inc. And you can see that the shares, this is the market close 23.19. However, they did move up just above the 24. I think they closed in the after hours trading 24.15, so slightly higher. However, although it was good that we found support, perhaps indicating a pattern of higher lows, which is good. However, the moving averages are moving down strongly and will give severe resistance to the upside. I would see these as the dominant factor. Yes, we might rally up towards the 50-day at 24.59, but that will be the resistance too far, and I would really expect these supports at the 22.90 level to be tested. The RSI is indicative of negative momentum. It will bounce up today, but will stay in its downtrend, and the MACD are negative as well. On the weekly, you can see this potential line of support from this pattern of higher lows. However, as I said, it's vulnerable if that is broken. Here the RSI has gone back below 50, 44.4, and the MACD are just rolling down as well. On the 4-hour, here perhaps, well, we have bounced up from here in the after hours trading, so the RSI will have bounced out of oversold. You've got the downtrend in 20, and the 54-hour moving averages have just created a bearish cross, which is negative. They're tracking down very aggressively and will give the resistance. MACD are indicative of negative momentum. So overall, if the rally from the after hours trading continues, that should be used as a selling opportunity, because further downside is expected, and this chart would be very vulnerable if the support at 22.90 was broken. On the support resistance, I say 22.90, the support's 22.88, and then second support 22.25, with those downtrending moving averages giving the resistance 24.59 and 24.74. In the UK, we'll start with Wincanton. Came out with good figures earlier in the week, is now consolidating at these higher levels. However, this was a confirmation of a flag pattern. We had a good bullish run through December up to March, then a sideways move. We've now broken upwards again on high volume. One should expect further upside. Any consolidation will just prove to be another flag and will eventually prove to the shares will move to the upside. The RSI is showing positive momentum, as is the MACD. On the weekly, and you can see the break upwards on the high volume, which is good. MACD are perhaps drifting, but I think they'll tick up once we have another week of stabilized or higher prices. And on the 4-hour chart, you can see the move up again from the flag. Nothing here to be concerned about. Marginally overextended away from the moving averages, but any consolidation will find this support at the 292 to 290 level and should hold. On the support resistance levels, because we're at an all-time high, I've put no resistance in. Support comes in at the 20-day 277.37 and then 271.22. Finally, moving on to Burberry. Come out with figures this morning. Shares have had a good run. It is bouncing into resistance that we had from the trading pattern in March. However, it is positive that we've had a bounce from the moving average, gone back through the downtrending 50-day moving average. Perhaps we'll have a consolidation in this resistance, but once the moving averages catch up, maybe let the 20 come back up through the 50. That should give the push up to higher prices. The RSI is in an uptrend. It was good that we had higher volume on this big picture, on the big move on Thursday. It was an engulfing pattern on the candle as well, which was good, and the MACD are positive. On the weekly, you can see the move into the resistance. In fact, there was resistance from this level back in April 2015, so it is quite significant resistance, so will hold the market. So don't really expect to push up at the moment through 1800. We'll push up towards there and then consolidate. We are going to get a golden cross on the moving averages. The 50 and the 200 week are just about to do that, which is good. And we're at the moment we're trading up with the 20-week moving average. MACD slightly negative. We get that quite a lot on weekly charts. It's a kind of a lagging on this weekly, and a couple of weeks at this level and it'll soon turn around. And finally, on the 4-hour chart, you can see clearly we've bounced into resistance. Move back above the 200 4-hour moving average. That will give support around about the 1700 level. MACD and RSI both indicative of positive momentum. So on the support resistance at 1803 in Burberry and 1838, with support 1626.3 at the 20-day and then 1558. So that's very quick run through 4 charts, 2 in the US, Shopify and Gap, and then Wincanton, Burberry in the UK. I hope you found this video of interest. If you're not a subscriber to my YouTube channel, please do subscribe. I'm putting videos on of technical analysis all the time. Please remember that these videos are for educational purposes only and are my opinions, and in no way are they meant as an investment recommendation. I'll see you next week. Goodbye.